Hello and welcome back to the channel. Now, if you are a frequent viewer or even a subscriber to the channel, I just wanted to say thank you so much for putting up with me lately. It's been a lot. As you may have seen in a recent video, we talked about a day in the life of a financial advisor and how for me, January and February get unbelievably busy. So as my schedule starts to normalize and things kind of return to more of a reasonable level, I'm gonna make sure to get more great videos up for you guys and answer your questions. But I don't think I could do something more tone deaf than get right back into personal finance videos without at least addressing or acknowledging the situation in the Ukraine right now. Now, I'm from Canada. It's been a tough couple weeks up here because, first of all, if you haven't been living under a rock, you probably saw that we had a massive trucker convoy. We had our Prime Minister on the front page of News Everywhere who invoked some emergency measures that were probably not the right thing for the time. It's been a bit of a political disaster. And now, in addition to this, you might not know this, but other than the Ukraine and the surrounding countries, more Ukrainians live in Canada than anywhere else. And people with Ukrainian heritage or ethnicity actually make up for the third or fourth most populous ethnicity in our entire province. And so where I live, there's a lot going on and there's a lot of people around me who are being disproportionately affected. And it goes without saying that the situation between Russia and Ukraine right now is deplorable. You have an autocratic bully infringing on the freedoms of another country and coming in and really just playing on resentments that have been around for decades. And so in acknowledging what's going on between Russia and Ukraine right now, I thought the best message I could share, that I could muster, was to pass on some wisdom of a man who was a literary hero and eventually became a Nobel Prize winner for documenting the atrocities and the things that happened in the Soviet Union when they were suppressing free speech and when you couldn't even write a book about what was going on between the starvation and between the famines and between the torture and all the different things that happened in the Soviet gulags. A man named Alexander Solzhenitsyn documented the entire process. And so today I want to share a quote from a man who lived in the society whose resentments are now kind of playing out in the modern world between Russia and Ukraine. In trying to decipher what had gone wrong in his society and what had led to all this suffering, the wisdom Alexander Solzhenitsyn passed on to us in his most profound quote was this: "Gradually it was disclosed to me that the line separating good and evil passes not through states, nor between classes, nor between political parties either, but right through every human heart, and through all human hearts. This line shifts. Inside us, it oscillates with the years. And even within hearts, overwhelmed by evil, one small bridgehead of good is retained. And even in the best of all hearts, there remains an unpruded, small corner of evil. Since then, I have come to understand the truth in all the religions of the world. They struggle with the evil inside a human being, inside every human being. It is impossible to expel evil from the world in its entirety, but it is possible to constrict it within each person." So what does this really mean? I mean, we know there are different ways that we can support what's going on in the Ukraine, but one thing that we can really do is we can look inside of ourselves and realize that all the evil that happens in the world isn't just on the other side of the political aisle from you. It's not across from the boardroom table from you. Evil is in every human heart. And what Solzhenitsyn meant by this is that evil and good is in every human, and your goal as a person should be to let the good side prevail. And so instead of sitting at our TVs or looking on Twitter and casting judgment on other people or looking across the world and saying, how could they be so evil? One of the ways that I believe, at least in my 2 cents, that we can make an actual lasting impact beyond what we believe possible is to look inside of ourselves and to confront our own resentments and to acknowledge the times we've cheated, to acknowledge the times we've lied, and to try to identify and really come to terms with the fact that there is evil in all of us. And our hope throughout our life should be to let the good side of us prevail as much and as often as possible. And then we do that with our children, and we do that with our families, and we do that with our communities. And over time, you create less people who are willing to go to war for radical ideologies, and maybe you create a better world. And so, of course, this is not a political channel, you guys. This is not a self-help channel, but I just really felt urged to pass on the wisdom from a man who was at the precipice of what we're seeing today, and who came to the conclusion that maybe the best way forward and the best way we can change the world and the communities around us is to consult the evil within ourselves and do what we can to become better people each day. Now, having said that, I can completely understand how it might seem out of touch to start making finance videos about the stock market and your financial plan in the midst of a war that's going on with real people. And so I completely empathize with that and I understand that. But just because someone is suffering to a larger degree than you are doesn't mean that you shouldn't at least consult your own situation and to see whether or not there are things you should be doing to be more prepared for your future. So today I wanted to talk a little bit about the one thing I do know how to talk about, which is financial planning and investing and how it relates to our clients that we serve every day. And this week we've been getting a ton of calls. We've been getting calls up in here in Canada about people wanting to withdraw their money from the Canadian financial system because our Prime Minister has gone absolutely insane. That's a side note. When we think about what's going on in Russia and the Ukraine and what this presents to us in terms of the market volatility, how it might affect our financial plans, and whether or not we need to be preparing, today I want to break down all these things and what we're telling clients to kind of either ease the nerves or make sure that we're making the correct adjustments to their plan based on what's happening. Now, first things first, a lot of people have been thinking, what kind of evil world do we live in where the stock market is up on the news of war? If you've been watching the markets over the last few days, when we saw Russia initially invade, the markets got very volatile. They took a massive dip, but by the end of the day, they had actually recovered all of that correction and then some. And then the following day, the markets were up the biggest day that we've seen since the start of the year. So what gives? What is this all about? And is this some corrupt system where we're winning when others are losing? But the reality is we just need to understand we're living in some very interesting, inverted times in terms of what seems like common sense. As you may have seen in previous videos, what we know about the markets right now is they are largely being driven by monetary policy. What that means is the government going to increase interest rates, which puts brakes on the economy, or are they going to decrease interest rates, which puts the gas in the economy? And so when the economy gets way too hot and we see inflation start to run really high, the government says, okay, we need to hit the brakes here so prices don't get out of control. So a haircut doesn't become $1,000 and a jug of milk doesn't become $80. We need to hit the brakes. The way the government does this is they increase interest rates. And now I've done a video in the past about how raising interest rates can really hurt asset prices like stocks or real estate or bonds or really anything. Raising interest rates can be one of the biggest catalysts, especially in modern times, for a reduction in asset prices like the overall level of the stock market. I'll link to a past video I did here so you can learn more about how that works if you'd like to. But the reality is markets are very focused on interest rates right now. And so every bad piece of news that comes out in the world gives the government more reason not to just raise interest rates quite yet. So as we see a war in Russia or we see some sort of thing going on in the world, a geopolitical risk or some massive recession, whatever it might be, some risk, that gives the government more reason to maybe delay increasing interest rates. And so we're at this place in the economy where bad news essentially starts to equal good news. In the markets, if there's some sort of bad news, it means, wait a second, our number one priority, the central banks and their monetary policy, they're going to be a little more lenient in how they raise interest rates and how aggressive they get to slow down the economy. They might let things run. And so the market sees these events and says, wait a second, this is not good on a geopolitical level because who knows if all of a sudden the US gets involved and now we have nuclear war, we have World War III. That's obviously a catastrophe. So it's complex, right? Because as much as you might be sitting in front of your Twitter account, smashing on different keys saying, why are we invading Russia? We need to protect the Ukraine. Yeah, I understand that. I completely empathize with that. But do you want to start World War III or do you want to contain this? And so the world is complex and the world is messy. And so what is a massive geopolitical risk to American investors actually signals that the Fed might not raise rates and it might just keep those valuations on asset prices high for the time being. And that's why we're seeing this market increase. Now that we understand what's happening and why, I want to share with you what we're saying to clients in this time. Because the reality is, most of our clients and most good financial planning clients have goals. There's things about the future that they're working towards. In the old days of like financial planning and investment management, you had stockbrokers. And what they were doing was just hitting different slot machines, trying to see if they could make their clients a quick buck. Over time, the industry has evolved more towards helping people achieve goals with their investments. And that's a much more productive way to do things because that then takes into account things like, of course, your investments, but also what's your goal? How much are you saving? What are the tax implications? How do we protect against risk? It's a more holistic picture that allows for better client outcomes instead of just focusing on the day-to-day gyrations of the stock market. So what are we saying to clients? For us, it's okay, let's all just take a breath here and take a step back and distance ourselves from the problem. And think about this. Are we on track for the goals? Every client we have has goals they've set. Maybe it's 2, maybe it's 5. Let's look at each of your goals, okay? This has had a bit of an impact on the market, you know? S&P 500's down probably close to 10%, and NASDAQ's down in correction territory. Have your investments been affected so much that now you can't achieve some goal? This hasn't derailed our diversified portfolio so much that you can't achieve your goals, okay? That's just the end of that. Now, if it has derailed your goals, what adjustments do we need to make? Are we realizing now that this portfolio is not what we bargained for? Are we realizing maybe now we're not saving enough to have a robust plan in the event of volatility, right? Let's make those adjustments. Let's have those conversations. Ultimately, what you might be thinking, and what a lot of our clients are certainly thinking is, yeah, Josh, that's all fine right now. My goals are fine right now. What if the market, what if what's happening in the world creates a -30 on the S&P event, creates a -40 market decline? What happens then? And so at that point, and again, this might come across as a little tone deaf and a little out of touch, but at that point we rely on the statistics and we take a look at, okay, what has happened in war times in the past? We go back to the statistics. We're not predictors of the future, okay? We're not pulling out some crystal ball and charging a client a fee to give them a prediction, because we're gonna be wrong just as much as we're gonna be right, and there's no value in that. So, let me show you the data. Here is a chart showing all of the wars since the Nazis invaded Poland, okay? And so you see all the major wartime events here since 1939. If we look, these columns show what happened before the event in the markets and then what happened after the event, okay? And so if we look at the furthest left column, what we see is, okay, yes, this was not great. Before the wars, we see that on average, 3 months before, the market was down 1.5%. And then 1 month before, as tensions rose, it was then down 2.1%. So the losses are getting worse. And then what you see is that 1 week before and 1 week after, things kind of neutralize, okay? The market integrates these expectations. And over time, what you can see, the main point of this whole chart is that 12 months out, okay? Just 12 months after that initial contact, that initial moment in wartime, the markets are up on average 7.7%. And the median is even higher at 9.7%. The percentage of times that the market is up 12 months after a war-style event is 73%. 73% of the time, the market is up 12 months down the line. And so what I'm ultimately getting at here, guys, is there are going to be a ton of people going through this event, looking at their investments, looking at the volatility, thinking about how this might change the world order and there might be World War III. And they start to get either ultra defensive. They want to move their investments to something more conservative. They want to get strategic and maybe make all sorts of moves for an event that statistically has no real difference from average market expectations over time. And ultimately, this is the point. If we have no idea where the future is going and we're trying to predict an uncertain future, all we can really rely on is the past, because we know that some elements of the market will be human nature in the way that we react to things. And if we look at the average over many different war-style events, we're gonna see an average way that humans react to that, okay? And so this is ultimately what I'm getting at. Sure, you might say, yeah, Josh, well, there might be a -30 on the S&P. I refer to the statistics and say, well, if your goals are not derailed right now, statistically they will not be in 12 months from now. And so that's what I'm ultimately getting at here, guys, is thinking about your investments through the lens of what your ultimate goal is. Now, I can totally understand the angst, because over the last 5 or 6 years, it's been a very easy time to be an investor. The markets have had relatively low volatility, and other than a little blip with COVID in 2020, we've actually just seen markets just continue higher and higher and higher uninterrupted, with no real geopolitical conflicts of major proportions, with no major gut punches to the financial system. And so what we have in context is a lot of young people getting started investing in many easy years or easy times. Even advisors like me and the other young advisors getting started with clients in very easy times. And we talk all the time about how great it is to be an investor. If you simply put money away consistently, you buy shares of great companies, maybe you get an 8-9% rate of return over your 40 years of your career, you can become a multi-millionaire, and then your capital can provide your income and you can be free, and all these great, wonderful ideas. The caveat is you have to be able to roll with the punches. And so for the first time in 5 or 6 years, we're probably seeing a real punch, maybe for the first time in a decade. And ultimately, guys, that's what we're trying to get across. That's what we believe is the best course of action for a client or an investor. Think about what your goal is, and the scoreboard will take care of itself. If you maintain your focus on the goal, your 10-year compound return will be higher. And the reason it will be higher is because you won't be moving in and out chasing hot strategies because returns weren't as good as some other guys, and you won't be spending commissions and taxes on short-term trading and creating capital gains and all these sorts of things. And so I have this analogy that investing is kind of like a bar of soap. The more you touch it and change it and mold it and move it around, the less matter you ultimately end up with. It disintegrates. And so the moral of the story here, guys, is that you need to try having faith that if you stay goal focused, the returns will end up better. And so anyways, if you enjoyed this video whatsoever, thank you so much for watching. Make sure to hit that like button, hit subscribe, and turn on post notifications for more videos just like this one every single week. Until next time.